Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again in the gold market. So just yesterday guys, we were gambling on possible reasons why the gold market could show the upward directions, because everything was a bit negative for the golds, because Jerome Powell have actually promised to keep rising rates, stock markets moving higher, and well, actually difficult was to recognize what could really support the gold market. But situation yesterday has changed in the blink of an eye. As you know, the problems in banking sector in the United States, the Silvergate, Silicon Valley banks, Credit Suisse, which is postponed the earnings report. So all this stuff have pushed the banking in the United States sector down. So major banks have lost approximately 5-6% of their capitalization. I mean the JP Morgan, Goldman, Wells Fargo, and all others. Today on the Asia session, these tendencies continue. And since that's actually since the banking collapse have spread over the whole sector, but was not limited just by some really specific banks, such as the Silvergate, for example. It means that the reasons why the market has dropped probably have the banking system problem, so it relates to whole banking sector. I would suggest it's probably some problems with the liquidity, and that investors and the public start withdraw the cash and send them to the bond market, because 3 months bill currently gives you 5%, while the commercial bank deposit it gives you, well, at the best it will be around 2, maybe 2.5%, 3, and for the longer term, not for the 3 months, of course. Together with the high rate withdrawing the funds and showing the big negative reports recently on the Silvergate, on Silicon Valley banks, that just was some final push for the banking sector, and yes, it has collapsed. Now it is a bit difficult to say whether it's the starting of the big tendency or it will be more or less short-term reaction. But since we have also performances, we'll take a look on treasuries. You could see that this run into the quality. Well, I will show you treasuries a bit later, just need this chart to show you in the gold. So, but on the treasury bond, you will see that yield has dropped yesterday, so it was significant demand for the safe haven assets, and that's actually supported the gold as well, so people buying gold as well. That really could change the short-term perspective. So this might be just starting points, but we already have something that we could use for possible position taking. Yesterday we talked about the possible double bottom, but now we have some factors and reasons, drivers that could help market to form the double bottom and actually to trigger stronger upward direction back to the bread and butter trade target. As you know, it's around 19 even. Particularly speaking, yesterday we've got the grabber here on a daily chart. You do not see it on retail broker chart, but if you will take a look, as I have shown you already, on the futures, you could see that clearly we have the bullish grabber on the gold. This grabber suggests taking out of this top, which is actually perfect for our double bottom pattern on the hourly time frame. And it means that currently we already have reason to consider taking the long position. Yes, risk stands high, but at least this will not be the blind entry. You have the pattern on the back, you have the corresponding sentiment. Payrolls today, it's important, and it could bring some adjustments in overall action behavior. Maybe it will be risky, but for now, as it stands on the technical chart, everything stands more or less positive. So now I will show you the treasury bonds, you will see this dollar index. Here it is. It's a monthly chart. This was discussed in our vehicle report. I will show you the daily, and you can see what really has happened yesterday. So and it's going right now. So it's just massive run in a safe haven assets, in the treasury bonds. So yield has dropped significantly, down from the 4% to the 3.8. This is significant. In price of the bonds, approximately you should multiply it for the 3.5 for 4, and we have the drop for approximately, well, about 1.5%, so a drop in bond prices. This is well, this significant move for the bond market. Now on lower time frame on the gold, that's the pattern that we're considering, and we see how situation will go with it. And this is bread and butter target, so probably actually this is the same chart that we discussed yesterday. But now we could start working with this upward direction. Of course, situation could change. Maybe we will be wrong. Maybe payrolls will return everything back to its own. We will see. But it seems that this collapse is not just reaction on some short-term news. This is something systematic. So this is something important. And from that standpoint, I would still consider possible position taken, because we already have the grabber. So this is a bit different situation compared to yesterday. And with the grabber on the back, we theoretically could consider some pullback here for position taken against these lows. Currently, with this upside action, market has completed the XOP agreement 1836, 1839. Hopefully, maybe payrolls will be not bad, and it could trigger the pullback here. And we could try to use this pullback for position taking. That's a strategy for now. We don't consider taking the short position, although the scalp traders could think about this resistance. But you will have to deal with the payrolls. While bulls, I think, could wait and see for the pullback right there. So if payrolls will be more or less positive, and the bears could get some money, and for the bulls it might be a good opportunity to get solid downside pullback and get a good chance for possible taking the long position with a relatively tight stops, or small potential loss. So I think that this is the trading plan that we currently could keep an eye on.